We're almost there. May the 4th be with everybody. That'll be this week. May the 4th be with the Fed, because we have FOMC this week on Wednesday, which I'm sure the market is going to love / hate / price in the worst of the worst. We're going to take a look at everything this morning. So let's do that. Let's begin with the risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the deal. Let's jump into the screen. Happy Monday, everybody. Let me confirm that everyone's coming through loud and clear on the channel. And say hello if you're out there. Good, good, good. Yes, yes, yes. Good morning, Don. Good morning, Chris. Morning, Marilyn. Rex, good morning. Wayne, good morning. Dennis, good morning. Ollie, Donna, David, Dustin, what's happening? Hit that like button, please. I love it. Good stuff. All right, cool beans, everybody. Let's get started. Let's jump to the charts. So I have the SPY up right now. We're looking at a pre-market slightly softer. It's really all about the news this week. So if we go into, I thought I had Forex Factory up. I do not. No big deal. We'll look at the Fed Watch tool. Refresh this for this week. So May 4th, Fed rate decision this week, Wednesday, 2 p.m. Here you go. May 4th meeting, 99.8% probability, again, from the CME group, that we're going to have a 50 basis points hike. This has been discussed. This is why we started to see that pretty strong capitulation move on the dollar for the last week or two. We'll see the dollar index. You can see the price reflecting that. So 50 basis points hike is expected. And the question will be, and hopefully the Fed gets this uncertainty stuff out of the way, raise it 50 basis points in May. And then it's going to be, are we raising 50 more basis points or 75 basis points in June? So if we go from 0.75 to 1% to end the meeting this week, that'll be as expected. Then we go into June, and you can see they're looking at 1.5 to 1.75. So a 93.4% probability, again, pricing it in, that the Fed is going to raise rates 50 basis points in May, 75 basis points in June. If that narrative changes, this will change, okay? Seems like what we have here is the Fed is trying to play catch up. We have probably already hit peak inflation back in March when oil hit 130. Things have calmed down a little bit. Things have plateaued a little bit. And we might see, again, plateauing, not necessarily declining inflation, but peak inflation might be well behind us. And now if we have China reopening, if we start to see what is a very aggressive hawkish Fed coming out swinging for May and June, if they can start to ease into the remaining rate hikes through the year, maybe even step off the gas a little bit to calmly bring us into the end of the year if the Fed wants to keep the markets afloat. Now, where we are technically on the charts, let's go to the daily time frame on the SPY. Year to date, we have some numbers to discuss. Year to date, where are we at? As of last Friday's close, the NASDAQ is down 21.16%. The S&P is down 13.31%. The Dow is down 9.25%. The 10-year keeps pounding off that 3% level but hasn't broken it yet. Right? Crypto's back below, or Bitcoin below 48,000, or 40,000 rather, and there's some strong support at 38, but we're going to watch. We keep looking at levels like 35,000, 30,000 as well for support. Amazon, and I'm actually curious. I'm going to look at Apple here in a second. Year to date, some of the big FANG stocks, we know that Facebook is way down. We know that Netflix is way down. Amazon down 25.45% for the year. Google's also taking a little bit of a bath off those previous highs. So all in all, things are looking pretty rough. Now, this week, if we haven't priced in the worst of the worst, okay, I do think that there is room for the SPY, for the S&P 500, to possibly, this week with the Fed rate decision and knowing that it's going to be a rate hike in May and rate hike in June, maybe the market wants to price in truly the worst of the worst. And that might bring the SPY and the S&P down to that 20% level. So I'm curious, off of our high to low, not so much 20% for the year, but 20% off the high. So there's two numbers I want to look at. 20% off of this year and off this recent high, we are talking 20% puts us around 385. Okay, I'm going to make a note of that. 385. SPY at 385 equals 20% correction. Okay, 385. So if we come back into that zone, that is that 20%. That is officially the scare of bear market territory. That's our death cross. But could that also be a buying opportunity to build back off of that? Now, let's say we hit 20%. We hit 385, and then we have our rally from there. That would be quite the comeback for the market to somehow come back 24%, 25% to finish the year flat. right? I'm not saying that's what's going to happen, but if there's any buying interest and everything is literally on sale at a major index correction at 20% in the SPY, or the Dow would be somewhere maybe in the teens. We might have the Dow at, 13 to 15% down. Nasdaq is probably going to be the hurt the worst. I wouldn't be surprised if Nasdaq is down, close to 30% or more if the SPY hits that 20% correction. So could it get worse this week with the Fed on Wednesday? Yes. Last week felt like capitulation. Last week it felt like, oh man, a lot of this bad stuff's getting priced in. It's going to be interesting because I could see this happening. Just like we had with the Russia-Ukraine official invasion day right in here, I could see the worst case scenario where it's like we push down, we push down, we push down. The Fed, with the rate decision on Wednesday, maybe that puts in a low, and then from the rest of the week to next week through perhaps most of May, we actually end up going into a bit of a recovery. Again, not sure. Look for the technicals. If we have a high to low, looking for a lower high to lower low. That symmetry does get us right around that 385 level. Okay? So that's stuff I'm watching this week, right? That's the SPY. DIA for the Dow, same thing. Are we down to the lows yet? I'm going to put a chart on here on the DIA. Can we get back down to these invasion lows? I'll put a note there. Invasion lows. Question mark. High to low, lower high to lower low. Let me check some symmetry on this. Check. High to low. Right there. And project right there. So we'd be looking to come back into around 310 or 308. So 310 to 308. So DIA 308 to 310. Symmetry correction. So watching for that. Now, what I intend to do, if this is what we are going to be dealing with, I do intend to have some free capital at the ready. This might be a week in equities on demand as an example that we might end up taking some, maybe some assignments if we can really cash in on a long put, or we might just take some losses on some credit spreads. That way we're not tying up unnecessary margin and we can get back into the stocks we really want to focus on. All right. So we'll see how it goes this week. We do have some expirations to discuss in class, have some cover calls to add. Last week, I know that I lost KHC barely, but I lost it at 42.50 for a nice little profit. The other one was, let's see, X was a covered call. QuantumScape we're in. Johnson & Johnson, I'm going to have to add another covered call. I think Delta's the other one. I couldn't roll Delta enough. So DAL, Delta, I bought it at low 30s, lowered my price down to below $30 actually with an added rolled covered call, and lost it at $37. So turned Delta for a nice like $7+ share move. Ended up closing out for, I think on Kraft Heinz about $6 a share. I'm trying to lose Johnson & Johnson. If I can get it back to 182.50, we might have some defensives this week. Johnson & Johnson had positive earnings. Speaking of earnings, as I'm jumping around here. So this is our year to date. Okay, everything's down for the year. This is our last week's move. Pretty awful last week. Negative 2.9 in the S&P, negative 3.25 in the Nasdaq, negative 3.58 in the Russell 2000, and negative 2.24 in the Dow. That's last week's moves. Notable earnings this week in stocks: MGM, Expedia, Pfizer. Got some interest in Pfizer. I've got a cover call out to the end of this month for $60. Another pharmaceutical company, Teva Pharmaceuticals, Advanced Micro Devices, some semiconductor plays there. Starbucks, Airbnb. Collected a huge premium last week on Airbnb with earnings this week. Lowered my cost by over $6. And hopefully I can still lose the stock at 160. That brings my cost down to 140. So that could be another really nice one if we have a positive lift on Airbnb this week. I'd love to lose that for $20 a share. Lyft, Moderna, Uber. Interesting earnings this week. I rolled a covered call out to $33 on Uber. Maybe I could lose that this week as well. Again, get some of those stocks gone, get them called away, get some free capital, ready some cash on the side. Shopify, Virgin Galactic, DraftKings, Under Armour to round out the week. And just a note, you want to take a screenshot of this, I can send this link in the chat. Let's do this. I'll share this link if anybody's interested. Just some notable earnings this week I'll be watching. I will be discussing in class Monday through Friday for equities on demand. Maybe even take an options play around some of the earnings. So there is that in the chat. Here's some notable earnings. And this is May 2nd through the 6th. Reminder, we have May 4th, FOMC at 2 p.m. Eastern Time. Posting that in the chat as well. The market will be watching, I'm sure. The market will be watching what the Fed statement is. Are they raising rates? Are they doing what they said? What does Jerome Powell say? What's the press conference? And we'll be watching the 10-year note, the TNX. We'll be watching the 2-year. Okay, so we're 2.95 right now. Looking to test that 3% level. Anything above that is going to be, again, pretty shaky grounds for stocks. Because if you start to see a massive exodus in stocks, lots of profit taking, anything, if you can have a 10-year treasury note that will pay 3+% with fixed income, I know that inflation should be slowly deteriorating. If it's sticky for longer, we might see this kind of prolonged holding in equities. But if we're safely above 3% and holding above 3%, I feel like it's going to be safer to just collect the 10% or collect the 3%, and then eat the maybe 12-month difference for like once. I mean, I don't know. I'm speaking for baby boomers, which obviously I'm not one. But it is going to be an interesting choice to make from financial advisors and fiduciaries to be like, look, this is a situation, way less risk in parking it in a 10-year treasury at a 3+% move. But if we start to waver off that, where we peak at 3%, start to dip back down, we'll see what the dollar does. Speaking of dollar, U.S. dollar index, it's been going strong. We are through these highs, but coming up and coming upon the big weekly resistance from 2020. So we noticed this. This was a fifth wave move. We're kind of pricing in this last little bit. This is what I think is a capitulation move, where once the Fed comes out saying, okay, 50 basis points in May, 75 basis points in June, I think we can start putting in more of a topping pattern on these dollar crosses. And if you look left on the chart, we have this high right here at around 12,942. And that was a COVID flash crash high from 2020. So I'm watching to see, do we get a turning point coming sooner than later on dollar crosses? Pairs that I really like and have good opportunities on. Euro dollar sitting at major support at 105. Pound dollar approaching some awesome support near the low 120 level. Or if we get to 121, 1.20 on pound dollar, extremely interested in some buy opportunities. Aussie dollar back down towards 70. We get to 70 or 6,700. Very interested in buying there. 6,400 to 6,200 on the New Zealand dollar. Dollar CAD running into some resistance around 29, 29.50. Dollar Swiss has been overextended by another 100 pips or so after I close out for 96.50 profits. And dollar yen still hanging out the 130 level. So the whole basket looks ripe for some tops to form, or some weakness to hit the dollar, at least in some retracements. But again, rather than calling that top or bottom in those respective FX pairs, I'm looking for confirmation. So a little bit of confirmation goes a long way, especially with major news this week. But I want to focus on the trades and the technicals. Okay. Other pairs, let's go to currency strength for this morning. Just curious. We'll take a look at some stocks. Everything's pretty clustered today, pretty low on the volatility scale. Last week's move, things have been stretching out. We've had some pretty big volatility vertical axes over the last couple of weeks. Notable, the yen's been super weak the last 7 weeks. We're starting to see some volatility step back in with the risk-off flows. You can see that the Japanese had a nice little run last week on Friday. The pound came out swinging as well. A couple positions I really like Forex-wise that I'm in. I'm long on pound Canadian. I'm long on pound Canadian off this major support at 6,000. So I did get a nice buy trading at 6,005. Flex traders got that with me, as well as a small position around 62.80. So I'm looking to see, does the pound CAD use this area support, come back into 64, 6,500, possibly even back up here towards 6,600, and to have a nice little bounce off this low to take some profit. Pound Swiss is another one that I'm trading off the channel lows. Something like this. I bought the equal lows here on 2,100. It was 21.15 was our entry in Flex. We're up some nice profit. We're up over 100 pips right now in our first entry. I'm stacking some orders up, trying to get back to 2,400 or higher. And then, like I said, dollar pairs, pound US dollar, we're sitting at 25.44. I know there's more room to drop. Look left. We have this 122 to 120 support, 122 to 120 support. If we fall back into the same area between 122.50 to 120, and potentially down to the flash crash lows at 1.15, I'm willing to take that build. I'm willing to build pound dollar from 1.20 to 1.15, build small, build confirmation, add to my winners, and take this thing all the way back for a nice run at 29.50. I do think over time, wherever we form some lows, whether it's lows now back to 29.50 or down at 1.20, to 29.50, or down here at the COVID crash lows at 1.15 to 29.50. I think that is an opportunity that I'm certainly interested in exploring and taking, and that will be a position I'm willing to build. All right. Pound CAD, similar with really nice support. Euro CAD, Euro dollar, pretty similar off of major support. Here's Euro dollar, same thing. We're at 105.12. Look left on the chart. This goes back into February of 2015. Now, another thing that's going to be interesting. I keep drawing this, right? This central bank curve, this bell curve. If we're seeing that central banks, okay, there's my bell curve, hawkish over here on the right, so we're raising interest rates, and negative on the left. The euro has been at zero for a long time. You know, under the guide of Mario Draghi to now Christine Lagarde, same thing. But the ECB is discussing: are we willing to raise rates? Are we going to raise rates? Is the market going to look to price that in? We have this kind of this unsynchronized central bank monetary policy, right? Central banks are either raising rates, they're staying neutral, or nobody has cut rates yet, but we still have the JPY negative deposit territory. We have the ECB with deposits at negative 0.1%. We have the Swiss National Bank remaining at negative 0.75%. So we do have, banks that are increasing rates: Bank of England, Bank of Canada, Bank of New Zealand, the U.S. The U.S. Fed. And the discussion is that the ECB will slowly get off zero by July or September, maybe a 40 to 70 basis points hike this year. Again, that's a lot, but it's to help kind of tame and plateau inflation from running amok. Right? So we'll find out. But I think that because the dollar's been being priced in more aggressively, I do think that if that takes a breather, then it gives the market a chance to reprice some of the other central banks that are lagging behind. Right? So if the dollar gets hit, we could start looking at the markets pricing a euro rate increase, and there is that classic saying, buy the rumor, sell the fact. So if the rumor is, and the rumor's been running here for the last several weeks, dollar's going to get increased rates. So the dollar's been stronger, 10 years up. Fed's already given the hint at, crazy high probability, right? 99% probability that the market's going to price in that 50 to 75 basis points hike. That's as high as we see it typically, okay? So that's good. That means the market can digest this and be ready to move on. And then we start seeing this shift into other central banks like the Eurozone, for example. I look at the technicals on euro dollar. If we're sitting at 105 and we're coming back to these lows from 2015, that's 7-year support. Now, I'm not saying that the euro dollar can't go lower. And there's that potential threat of, the euro dollar is going to parity. Sure. But the way that we've fallen with a fifth wave move, technically speaking, I wouldn't be surprised if we end up holding some of this support. Now, it might be as low as 104, might dip into just below these lows here at 103.90. But I do think that once we do form a low, we have at least recovery coming back towards 108 to 110. At least back to 108 to 110. If I was to choose a setup, euro dollar is fine, but not my favorite. I think pound dollar actually has a better setup. If we get pound dollar into the low 120s, 121, 120, I think that's a fantastic setup for a big trade. All right. All right, so we'll be having a lot of discussions this week in Flex, Tuesday, Wednesday, Thursday. Equities on demand, we've got some decisions to make. We're going to take a look at all of our 5-6 expirations. A couple stocks I'll be watching this week. QuantumScape, we took a long put. We're trading at $14.98. They did a positive earnings. International Paper, if we can get that one gone at 48, it's down to 46.28. We'll put another covered call on that. Intel, we're trading at 43.78. We're trying to get this one back up towards $50+. And Micron was a good trade. We made out pretty well last week. And by the way, I'm super happy that we got out of this trade without getting assigned. So Micron was a Jade Lizard strategy for us in Equities on Demand. We did the $70 put, the 70 by 71 bear call spread. Ended up walking away with a net. It was about $1.05 net. So my max profit, if I let the trade do its thing, if it stayed above $70 last week, we would have collected 90 cents. That would have been our total credit. But we were able to close out that bear call spread for half the loss. So instead of losing $1 on that, we lost like 50 or 40, like I think 35 cents. 35 or 40 cents we lost on it. I take that back. 45 cents, yeah. Lost 45 cents, which gave us a little bit of a bump to our bottom line. We closed it out before the market closed on Friday and managed to avoid assignment and still collect a nice chunk of profit. We did the same thing on CL, which is Colgate-Palmolive. This thing came crashing down. Did not get below $75. So we could have kept the trade as in, collect our 50 cents credit, and those worked out to be pretty nice. Even though they're expensive stocks, we didn't have assignment, and we collected some nice profit on those. And then we had some credit spreads that were in. that we'll be discussing this week. SLB is another one, hopefully energy-wise. Stays resilient. I'd like to get this one gone around $45 to $46. We're still in WEAT around $10 and change. We're still in corn, which is pushing higher, which I'm loving. So we have some of this stock. We have some credit spreads as well. This one continues to run pretty hot, which I'm happy with. X and CLF pulling back. So do we have past resistance becoming support on steel? That's X, United States Steel. CLF, Cleveland Cliffs, same thing. Past resistance becoming support. Or is this what we see with peak inflation, peak materials, peak commodities? Do we start to see some of this volatility? Not sure yet. Okay, we'll have to figure it out. But I still like these plays. We're starting to switch and rotate over into some dividend plays as well if we can. We had some interesting developments on AT&T, trading at now 1907. WB, which is taking a hit. So, funny story. I actually caught. I was on the road yesterday. I caught a Rivian truck for the first time in the wild. Rivian Automotive. I feel bad for anybody that has a Rivian truck that thought they were going to get rich on the shares, because as a pre-truck buyer, I believe you had the ability to buy the stock around $75 to $80 or get in before it actually IPO'd. And, there was a very short window of everyone being super happy with the stock. And then there's the reality. I mean, this thing IPOs at $100, right? IPOs at $100+ and is now sitting at $29.93. Yikes. But that is kind of the tail of the tape for a lot of these tech stocks. I mean, you want to see another sad story? 4704 for ARK. Kathy Wood. Can't be fun. Are we putting in a bottom? I don't know. We're coming back into those COVID crash lows. This would be as low as $33. Could we hit that before the market's like, all right, we're going to get positioned in tech now? There could also be some interesting rotations where commodities have done well, materials have done well, dividends, staples do pretty well, right? Defensives. But if we're going to see some recovery, tech is going to recover faster. Now, again, a tech recovery could be short term. It could be a great, 3-month trade, maybe a 6-month trade. But I'm not expecting ARK to return to $160 highs anytime soon. If ARK does anything recently or anything to recovery wise, I'd say $80 to $100 would be amazing from current price. That would, from current price, we're looking at like 100% rally. Now, do we come lower? Do we go to $33 and then rally from there? Sure. We're probably going to have something like this happen. You have to remember, big decisions in the market, big decisions, a lot of times the market end up finding these areas, right? We find consolidation after these major decision cycles. So I could see something like this happening in ARK over the next 12 months or so. We end up finding a low, we find some recovery areas, and we base. And ARK might go nowhere for a while. Eventually the recovery could be a real thing, but it could be years away. So, once we settle in on some of these bottoms and stabilize a little bit, this is what I'm expecting to see for the market. Not recapturing highs, not this crazy bull market run forever and ever. Real consolidation, stabilization, and then some big decisions are going to be made. All right. But everywhere we look, there's going to be opportunities. We trade stocks, we trade options, we trade cryptos, we trade Forex. There are options for us. Okay. What do we do with FCX? I don't think I have the expiration of 429 for FCX. Cryptos, this is Bitcoin 38.7. Let's go to the daily chart really quickly. Daily chart. New monthly pivot for the month of May at 41,000. Back to the weekly pivot here at 43. This is a pretty important spot to hold. I could see a slight opportunity here on Bitcoin for a falling wedge. We start to get on the right-hand side of this. I could see a little rally coming on Bitcoin. Now, again, I want to see this area hold. I want to see some confirmation on the right-hand side of this falling wedge. Are we vulnerable down to 35,000? Sure. Are we vulnerable down to 30,000? Sure. But I do think that area is a bear trap. I think Bitcoin still has the legs to go higher this year. We might just have to kind of turn the corner officially with sentiment in the stock market. I think a lot of this is going to be predicated upon investors have to feel like they can put money into something with some growth opportunities. Maybe it's not tech, right? But I don't think anybody wants to just sit in bonds and lose to inflation. Sit in bonds and lose to a debasing currency. And I mean, at some point, the Fed is dialing up interest rates, and they're either going to look to keep it there or they're going to dial it back down because they are going to have to promote growth. If China starts getting off of their lockdowns and starts to see another, Asia reopening, China reopening, that's going to open up the floodgates for more accommodation, more stimulus. And I feel like the U.S. is probably not that far behind it because we have seen a pretty, healthy correction in the stock market as of late. So it's going to be, changing the dial, changing sentiment. I think that the markets are looking for any glimmer of optimism and bullish sentiment to give us something to rally on. Otherwise, buckle up, protect your butts, and make sure you're protecting the downside. Free capital is a good thing. Working capital. Make sure you're working the stocks you really want to have and own. Ethereum. Kathy Woods made a prediction that Ethereum in 10 years grows 50, 100%. Good. That's great. I mean, who's got the patience to sit on Bitcoin and Ethereum for 10 years? I do. That's the whole point of me investing in it. So, do I care if Bitcoin goes down to 30,000 or if Bitcoin goes to 30,000? No. Do I care if it goes to 100,000? Yeah, it's great, but I'm not going to close it. If Ethereum goes 50, 100%, great. I hold Ethereum. So, I mean, it's nice to be optimistic on something like this, to think that in 5 years, 10 years, those investments can pay, beyond well, right? Right now we just have to deal with the patience game. We hold, you know. So anyway, FCX. Let me see what FCX is. That is Freeport McMoran. So 39.89. We didn't have a trade running on this. We were in FCX a while back with a credit spread. Benji says hi, by the way. We're trading at 39.89. A dip is looking pretty solid. I'd like to see, something in here where we come back in. There's a yearly pivot around 37, maybe some stronger support around the low 30s. I'm pretty interested in this one to revisit some of these trades. So let's think about some options here in the low 30s. Maybe looking for a bounce, maybe some consolidation from low 30s into, $45 to $50. But my next trade in FCX will be somewhere in there. Okay. So anyway, lots to discuss today. Any questions, any specifics, any stocks you want me to look at, any Forex pairs, any cryptos? One that I did also buy. I'm kind of regretting it a little bit, but it's a small position. I did buy some Robinhood, and I bought it for this reason. I bought Robinhood at $10.33. Buy at $10.33. Now it's trading at $9.73 pre-market. So I bought it at $10.33. Okay. I think that Robinhood is a perfect candidate for a buyout. Now, how far down does the stock price have to go before that becomes a reality? I don't know. It's pretty attractive right now. I know that there's still $9 billion in market cap, and that's a pretty big price target. But if you looked at a Fidelity or a Schwab, I'm trying to think who is the owner. Like Tastyworks is owned by Fudge. I can't remember. I think it starts with an A. Whoever Tastyworks parent company is, like their holdings group, whatever. Believe me, there are brokers out there that are just salivating to be like, yeah, we're going to scoop up Robinhood. But if Robinhood goes down to $4 or $5 a share, and they come in and say, okay, look, we'll buy it at 6, we'll buy it at 8. Maybe that's not that good. That's not good for me. But if we have lows at 10, slightly lower lows with some divergence, I'm hoping we have a nice little relief rally, maybe into the 15s. I might just dump it. If I buy it at 10.33 and we get a pop up here towards 15, I might just dump the shares at 15. Right? But if it falls any lower, I think this is potential buyout candy for any major broker that wants to absorb a new user base. A new user base that's way more, kind of gamified when it comes to buying stocks. Like, give them something mobile friendly and let them buy stocks on their phone. Let them trade options on their phone. I'm not saying you have to have a crazy sophisticated platform to have, good trading, but it's a very different demographic from Robinhood users, Webull users into more of your traditional brokers, right? But anyway, I'm taking a chance on Robinhood. I did do a credit spread as well, like the 10. I think I did the 11 by 10, collected 30 cents, or the 11 by 10 50, something like that. I'll review it today in class. But I'm looking to see if we have a squeeze or a push up towards 15. If we do, I'll probably dump the shares. I'll keep the credit spread until expiration. I did something out to this month. So just food for thought. Anything else? We got a lot to review. Airbnb, DOCN, Delta Airlines, CSTM. Yeah, we've got plenty of stocks to add some notes on this week. And Aussie CAD, I see the question there, Juwan. Aussie CAD, sure. Aussie CAD, I'm long. I took a buy trade here at this monthly pivot area, 91.75. That pivot's 91.30. I'm looking for Aussie CAD to find some lows, and there's a couple spots. Either now, where we have this high to low, come back into the new monthly pivot, or come back into this green zone with consolidation, or I'm going to buy some more down here around 89 to 8,800. So Aussie CAD, I'm looking to level in. So we have a monthly pivot around 92. We have lows here at 89 and 88 that I'm willing to buy. So even if it's just a big range trade, come down here, trade it back up. Range trade. New Zealand CAD, Aussie CAD, very similar. Okay. Daniel, I didn't see the question from above. I saw your comment on Ethereum. What else? What's the question? Boeing have a huge drop? Yeah, I think Boeing did, right? BA. Yeah, 146. I mean, look, you want to see where things are at. I mean, look at FinViz. Just get the scanner of the market. So I'm trying to look at the information from Friday. We're close. I mean, Wall Street's opening right now, but right now we have, this is what's crazy. 6,680 stocks are below the 200 simple moving average. 80% of the stock market is below a 200 moving average. I mean, that is technically bear market territory all day. That's crazy, right? And we have 80% also below the 50 period. So that 50 period, 200 period, that's your death cross. That's why the momentum keeps unraveling. Again, we're going to have a super sharp change of sentiment to see that really get off the lows. Now, and we've seen this. We've seen dramatic declines become dramatic rallies. We saw that in 2020. We see more and more of those sharp V bottoms in the stock market. One thing I'm wondering is, are we going to see something like this? Sharp declines end up finding bases over time that we have to justify the rally. That's what I'm not sure of. How do we have the faster rally? Well, because we see that we have a super accommodative, growth-oriented Fed. And that's what sucks, is we have this complete market manipulation because it's stimulated like crazy. And we're dialing up interest rates, which is killing growth right now, killing tech. But if the Fed comes back in and says, hey, we put ourselves in a position where we feel like we have it under control, we can keep it interest rates here-ish, we're seeing that CPI numbers are coming down or starting to taper off, whatever. They'll say whatever they need to say. Okay. I think this all goes back to, they don't want a lot of market disruption going into the midterms this fall. So I think if they can do something to stabilize, maybe we stabilize here through the summer. Maybe the market takes a little bit of a vacation itself and low volatility kicks in for the summer. I don't know. But I'm just very curious. This week's going to be turbulent with the Fed on Wednesday. What does the market price in? Worst case scenario, pricing in all the bearish sentiment, pricing in the tightening, pricing in Russia-Ukraine continuing. Don't forget that we can make this way worse by having China, Taiwan as another potential conflict in the next 6 to 12 months too. Just throwing it out there. This has been discussed. So anyway, do we base first before we have a rally, or do we have a V bottom because we have Asia reopening and the U.S. says, hey, we'll do the same thing. We'll start to look at introducing growth once again. We'll start talking about accommodation. They're not going to dial back interest rates, but they will maybe slow the pace of this 6 to 7 hikes they've discussed this year. Right? So lots to digest. But again, a lot of stuff in bear market territory. Like I said, free capital, super important. Dry powder, lots of margin. That's a good thing to trade with. It's okay taking losses. This might be a week where it's not worth holding shares. If we have credit spreads, maybe the long put stuff doesn't look great unless we're super confident that we want to hold the stock. I'm glad we lost some stock last week. I hope to do the same thing. If I lose Uber this week, that'd be awesome. Airbnb would be fantastic. KHC I already lost. Delta I lost. And again, when I say lost, I mean the stock got called away for profit. Covered calls got it called away, which is great. So we'll be reviewing everything today in the next 24 minutes. I just had a chart alarm go off. SPY 410 invasion lows. There we go. So SPY is back to those invasion lows as we open up today and sliding lower. So we're down 410. You're going to see some red in the market. And again, it could be really ugly. Why? Because it's not the Fed yet. Maybe the Fed puts in that bottom just like the invasion low did back in February. But like we said, literally the first 5 minutes this morning, the 20% correction area on the SPY is 385. Are we heading down there? Look at our symmetry. If we go from high to low, right there, we take that symmetry and we stretch that. That area is around 390, 392. So from 392 to 385, I could see that being some very strong support levels because it also would be kind of the finish line. The bears have their fun. We have a nice symmetrical correction. We hit that big number at 20%, and then we see what the market's really interested in doing as far as buying a dip. Okay. All right. JPY pair, sure. I'll do some JPYs really quickly. Aussie yen. Now, here's a good thing. If we see risk off flows, the Japanese yen is going to continue to balance. So Aussie yen, high, low, lower high, lower low. Anytime that we have this high, low, lower high, lower low, if this happens this week, anything you can get your hands on with lower lows in the Aussie yen, I'm protecting anything. Okay, I might not even take profit because I might not be in profit. I've told traders this. I mean, some of my yen crosses, I'm only in a couple of them that are upside down. But if my break even is not enough to get back to break even or better or be profitable, or it's not, I'm not willing to kind of throw in a bunch of trades here, what I'm looking at doing is if we have a chance, I'm trying to sell the Aussie yen up here at the high. Now, we might not get that opportunity. It might be high, low, lower high, lower low. I think what I have to do is maybe take some losses right here and just assess, right? It's not worth holding and hoping that it comes all the way back to my break even. If it doesn't, I'll close it, I'll take a loss and get rid of the exposure, get all my margin back and start focusing elsewhere. CAD yen, same thing. Literally, the yen basket is very similar. If we have the three-wave move, that's all I'm really looking for. So do we round out a top? High, low, lower high, lower low. Does it come back into here? Does it come back into these, crazy pocket levels and imbalance levels between 92 and 95? If it does, whatever you have on CAD yen, it's worth protecting profit. If you're not in profit, it's worth taking smaller losses. Because if you've taken it this far and you've rode this thing from 90 all the way to 103, a little balance goes a long way, right? I'm telling you, 50%, 50% retracement. If we have this low to this high and this market finds a way to find 50% retracements, that is the market finding equilibrium and balance. Do not force the market to have to drop lower for you to get in profit. If this market finds 50%, to me, that's good enough. And I have to make an assessment to see whether I can get in profit or I have to take some smaller losses. That's my assessment. Swiss yen, same thing. High, low, lower, high, lower, low. Pockets galore. 127 and change. Can we come back and fill some of these levels at 126? Maybe. Previous lows are on 129. Pivot cluster here on 129. Watching those areas very carefully. Euro yen, same thing. High, low, lower, high, lower, low. Find some balance. Previous resistance becomes support. Pound yen, high, low, lower, high, lower, low. New Zealand yen, high, low, lower, high, lower, low. Same thing. Dollar yen, probably the one that hasn't moved yet, right? You notice there's no high to low. The dollar, is still kind of stuck off these highs. The Fed could help put in a bit of a top this week. It could help. We also might see it since it's on the left-hand side of the trend line. We might continue to see this thing rally. 134, 135. We could have a flash crash coming on dollar yen this week. I've warned it. I was in Orlando last week with a great conference. Warned, said it. Like, don't be surprised. Flash crashes put in tops and bottoms, but it could still happen. If we're on the left-hand side of the trend line, we're guessing at the highs, not confirming the highs. So we have to be protecting. This week in flex, it's going to be a hard decision, but if we have to close out for losses, we'll close out for losses. It's not worth fighting this market. If the yen's going to go up another 500 pips against us, it's not worth fighting it. So I want to see what price does this week. I want to see if we have some risk off flows. If we do, let's go to today's currency strength. So right now, dollar's starting to creep up there to the highs again. We're still pretty light on the vertical axis, but if the Japanese yen starts to get stronger, any type of lower low on the Japanese yen is a good thing because it gives us a chance to mitigate some of that risk, eliminate some of that drawdown, and we make that decision where maybe we just close out for some small losses or get ourselves in break even or better, and we move on, right? I know that my theme this year for Forex trading is not fight the Japanese yen, right? I want to get out of them as soon as I can. If I have to be taking losses, great. I don't care, right? Because I'd rather build a pound CAD position long, a euro CAD position long. I'd rather build a pound US dollar long. I'd rather build so many other positions than be stuck guessing if the yen's going to cooperate for me. Okay? So we will discuss. All right, traders, I'm going to let you go. Take a little break. I got class at 10 o'clock for Equities on Demand. Back to business, 10 a.m. for Equities on Demand. Really quickly, if anybody is in these sessions, you're watching this session live, watching these recordings, a couple of things. If you'd like to trade with me, I have trials for both my trading rooms. You can come into my website, pulverport.com, go into the systems page, and there are trading rooms. Okay, the reason I show this link is if you just go a la carte, it's like $200 a month. You come into the trading rooms, you come into my website, this is $27 for a trial. You can trade with me for an entire month, trade Forex with me, trade stocks and options with me for $27. Equities on Demand, we're live Monday through Friday. 10 a.m. every single day. Flex trading room, Tuesday, Wednesday, Thursday. All right. So we get plenty of time together, plenty of good decisions. We're up quite a bit for both. Doing what we have to do. It's not fun. It's real talk. It's real trading. So we figured out. Better to navigate it as a group and do it together than trying to figure it out on your own, driving yourself crazy. Right? So come check it out. 27 bucks will get you in for a full month, and let's do some trading. All right. Lastly, I would say on my social stuff, hopefully I've made this clear. Any scammers out there that's not this, not real Chris Pulver, not the official handles for me, not verified, whatever. Don't engage with the scammers and all the phonies out there. Just come to the YouTube sessions, join me live, trade with me in my trading rooms. That's it. Nothing crazy. Okay. All right. I'm gonna let you go. Happy trading, lots of profits. Happy Monday. May the 4th be with everybody this week. That'll be Wednesday when the Fed comes out swinging with their basis points hike, probably 50 basis points as the market's pricing in, 75 basis points for June. We'll see what old JPO says, and I'll see you back here on Friday at 9 a.m. Eastern time for the weekly recap. All right. Appreciate the thumbs up. If you click that thumbs up button for me, support the channel. Algorithm loves it. I love it. And thanks for being here. See you Friday. Thanks. Bye.